to watch the show ad-free and uncut before that it drops for everybody else. We reached out to YouTube. Shout out to our YouTube manager, Victor. He has now intervened, and we have helped to keep the show ad-free. So we can't promise 100%, but it should be dramatically less than normal for all of you who are out there. Of course, we're always thinking about you and your experience. Don't forget, though, is that there's not even a chance of being able to watch with ads if you're watching on Locals or on Spotify. So you have many different options that you have there. So breakingpoints.com to be able to get access to our premium show, ad-free, uncut, etc., as well as support the channel. So with that, though, let's get to the tariffs. And as you said, the market reaction. Chairman of the Federal Reserve, Jerome Powell, making a number of comments that he will not bail out the stock market, even though he believes that inflation and tariff impact on the economy remains very precarious. Let's take a listen.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective.
Some people believe the Fed will intervene if the stock market plummets.
These are very fundamental changes in, long held in some cases, policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago, so there isn't a modern experience of how to think about this.
Not a lot of experience on how to think about this, but the most important answer was him saying, no, I'm not going to bail out the stock market. Those comments were taken quite literally by the stock market. S&P 500 dropped about 2% yesterday. Futures as of this morning look relatively flat, so we can continue to see that. More importantly, though, is that Trump, it seems, has been betting heavily on the Federal Reserve actually cutting rates, and that is just not what the Federal Reserve chairman is saying as of this morning. As of this morning, as we also know, Donald Trump actually attacked the Federal Reserve, saying the Federal Reserve Chairman Jerome Powell that his, quote, termination cannot come soon enough. But because of the way that terms and appointments and all of that work, there's still a significant amount of period before any movement on that is even possible, as well as almost certainly some court challenges as they try to do some, there's complicated legal stuff going on, but they're trying to set the ground to be able to remove the Federal Reserve Chairman if they want by challenging some long-held scrutiny on that law, which could be interesting in and of itself.
Yeah, I think it relates to some of these, they fired like, NLRB chair, some of the CFPB, some of these agencies that are supposed to have independence, some distance from the executive's whims. That's being challenged in court, so that could relate to what is going on here as well. But, from the perspective of the Fed chair, right, you are being put in a total bind here. Because on the one hand, yeah, the tariffs are very likely to slow growth. In fact, I think we already know the tariffs have slowed growth. You can see it in real time, what's happening. So that would lend itself towards, okay, well, let's cut interest rates to try to get the economy moving. On the other hand, the tariffs are inflationary. So cutting the interest rates might help further fuel inflation. And so, this potential stagflation bind really leaves the Fed in a very difficult place. And what Jerome Powell is saying is, hey, for now, we're just holding where we are.
Yeah, exactly. And so let's go ahead and put A2 up on the screen, because there's been major movement here in the United States in terms of how this trade war with China is positioning. We're going to talk next about China and about some of the consumer environment where we're all likely to experience quite a bit of price hikes. But it is becoming clear now that NVIDIA is the, quote, biggest U.S.-China bargaining chip. I previously had flagged this story, and that's why I wanted to come
I see what
back.
you did that.
I see. I wanted to come back to this, is that previously Jensen Huang, the CEO of NVIDIA, had paid about $1 million to attend a Mar-a-Lago dinner. At that dinner, he apparently convinced either Trump or somebody around Trump not to put export licenses on those H20 chips that NVIDIA had developed specifically to be liable with these export controls and be able to ship to China. Approximately $5.5 billion market segment for NVIDIA. Well, it came out overnight that as a result of the tariffs, and despite some of the previous promises that they had made to NVIDIA, the United States would be slapping export controls on those H20 chips. Now, immediately, I just woke up to the news this morning, Crystal, that Jensen, not here in the United States, he's in China. He actually has just met with the Chinese vice premier and with the CEO of DeepSeek, trying to assure them that they all still want to do business. But it does tell us where to the extent that we have any real leverage over China, it's not really about consumer imports and stuff that they necessarily need. And we're going to talk a little bit about their consumer price, like the injections that they're putting in terms of their support. A lot of this high-tech manufacturing and design specifically is really where things are landing for what we are trying to do with them. The question is, of course, about buckling, about technology transfer, and more. But the reason why it's important also for the pressure here in America is that it sent NVIDIA shares sliding with the overall pressure right now on the consumer, the retail environment. So it really does show us that while we've had an almost 60% reduction in overall U.S. imports just in the last 2 weeks. Extraordinary, genuinely extraordinary. And nobody has any idea how that will even show up in the price environment. With the Federal Reserve Chairman, the NVIDIA strategy, the chaos and everything moving back and forth, you can just see that markets are very uncertain right now, which is part of what you see so much of the wild volatility happening.
Right. So just to give a little bit of background here, you guys may know some of this. So under the Biden administration with Treasury Secretary Janet Yellen, she said quite directly that the point of the export controls that the Biden administration put on the sort of like top shelf chips was to slow China's development, technological development. And perhaps it had some impact, but part of what the DeepSeek innovation really proved is that they were in a lot of ways able to either directly circumvent or innovate around that particular export control. And again, that was for sort of the top shelf, like top of the line, most advanced chips. So NVIDIA produced this H20 chip, which was meant, as Sagar mentioned, to get specifically around those export controls, to be sort of like a lower grade, like, okay, well, this isn't the top shelf stuff, we can still sell this thing. And so that's why they were doing big business in China with regard to this particular chip. Now, China does have their own chip capacity, especially when you're talking about this level, not the highest of the highest level chips. It's largely through Huawei. And are they exactly as good as the H20? There's some indicators that they aren't quite as advanced as the H20 chips, but they do have some of their own domestic chip capacity. And also what we learned under the Biden administration is that this did not hobble them nearly as much as the Biden folks were hoping that it was ultimately going to hobble them. So in any case, this was a big hit to NVIDIA stock. NVIDIA, one of those magnificent seven, huge impact in terms of our overall stock market. So that was part, in addition to the Jay Powell comments, that was part of what has been going on in the markets.
Yeah, exactly. So let's go ahead and then put the next one up on the screen so people can take a look. You can see the quote, the U.S. and China trade fight is, quote, slamming stocks, sending gold to record high. The gold market has been absolutely insane. It's like I've seen a price target there of almost $4,000, which is absolutely extraordinary. But the reason why that we're returning or starting off on this is just to show people that NVIDIA, because remember, it makes up so much of the S&P 500, that if it's going to be a major bargaining chip in the Trump administration strategy, that if we're going to see stocks sink there on top of the overall global strategy that they're putting into place, retail pressure, just this morning, much of the pharmaceutical tariffs are, be shaking out in the markets, as well as some other regulatory action. United Healthcare stock down by like 11%. Yes, I know, funny, like meme-wise, but it's actually a huge segment of the overall markets. We have sector by sector decline in everything, which just makes it so that there is huge pressure on the U.S. economy. If we do start to see mass layoffs in the next 90 days or so, as Ryan Peterson predicted, that will put a tremendous amount of pressure on all of these different, in terms of the regulators, on the government, and more. And the Chinese are absolutely buckling up. So we just want to lay the groundwork for how things look over here in America. That's the NVIDIA front. There's also the dollar. This has been a major story as well. Let's put this up there on the screen. Quote, what the weak dollar means for the global economy. We have, and this was not actually expected to see such a dramatic decline in the dollar relative to every other global currency. But what they point off here is that the, quote, unexpected weakening of the dollar is suddenly becoming the rest of the world's problem too. Because for foreign sellers, all of these goods, cars, cognac, Scottish tweed, the dollar steep slide is a double whammy. It's compounding losses caused by President Trump's import levies. So the central banks around the world, they either need to stop the rapid strengthening of their currency, cut interest rates more aggressively to try and lower their overall target versus the dollar, but that will have major macroeconomic effects in their own countries. Also, of course, the dollar decline now means that currently has slipped 8% per year, which is the worst start to the year in the index's 4-decade trading history, just to put into perspective how insane that is. There has been, it's not just lack of faith in the dollar, it's really about US government and trade. And then when imports are also